Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Wow, it seems like every day there's news about another company getting bought or sold, right? Especially in the world of tech-enabled services.
Yeah, absolutely. It's a lot to keep track of.
It really is. And if you're not careful, it's easy to get lost in the headlines, you know?
Yeah, definitely.
So for today's deep dive, we're going to kind of cut through all that noise and zero in on what's actually important, especially for folks who are really interested in the lower middle market.
Right, exactly. We've got a great report here from middlemarketgrowth.org. It's dated March 13th, 2025.
Okay.
And we've also been looking at some of the news that's come out about specific deals, fundraising announcements, that sort of thing.
Got it.
And really, our goal is to try to figure out the key trends that are happening in mergers and acquisitions in the tech-enabled services sector.
Yeah.
Right? And what it all means for, those smaller but really dynamic companies out there.
Yeah. Okay. So right off the bat, the report from middlemarketgrowth.org highlights this idea of resilience in M&A activity, particularly in tech-enabled business services.
Yeah.
Which is interesting, right?
Yeah.
Because even though there might be some economic uncertainty, this sector seems to be holding its own, right?
Yeah, definitely. Despite any kind of broader economic headwinds, this sector seems to be kind of chugging along, doing well.
Yeah. Yeah. And to really kind of illustrate this, let's talk about what they call platform investments.
Right.
So when we say platform investment, we're talking about a private equity firm.
Right.
And for folks who might not know, a private equity firm is basically a company that pools money from investors to buy and manage other companies, and they go out and buy a main company.
Right.
And they use that main company as a platform for future growth.
Yeah. And usually through additional acquisitions.
Right, exactly. So they make further acquisitions and build up that platform company. So it's fascinating to see the variety of industries where these initial platform deals are happening, you know?
Yeah.
So one example is Rubicon Technology Partners.
Right.
They're a middle market PE firm that specializes in software, and they just recently acquired a majority stake in CollegeNet, which is a company that provides software solutions for higher education administration.
Right. So they don't own the whole company.
Right.
But they have the controlling interest.
Right, exactly. They have that controlling interest. And what this tells us, right, is that even in these really established sectors, like higher education, there's a strong push towards technological upgrades, right?
Absolutely.
And this suggests that there might be opportunities for software providers in this space.
Yeah.
And maybe even a whole wave of similar acquisitions in areas that have traditionally been less tech-heavy.
Yeah, I think that makes sense.
Yeah, totally. And then you've got the Oakdale Company, which is a private investment firm, acquiring CenturyTech.
Yeah.
Now, CenturyTech is in a completely different space. They manufacture flexible packaging machinery.
Okay.
So very different from software for higher education.
Right. Totally different.
And what really stood out to me here, and middlemarketgrowth.org actually mentions that this was according to an announcement provided to them, is Oakdale's strategy, which is to grow through internal efforts, but also through additional acquisitions down the line.
Okay, so they're kind of playing both sides of the game there.
Exactly.
That's right.
So they're doing some things internally to grow, but they're also looking to buy other companies and bring them into the fold, right?
Makes sense.
Yeah. And if we connect this to the bigger picture, I think it suggests that even in these more traditional manufacturing sectors, companies are starting to realize the importance of strategic investment in growth through M&A.
Right.
It's not just about pure technology plays anymore.
Yeah.
And then we see J.F. Lehman and Company, also known as JFLCO.
Mm-hmm.
They're a PE firm that focuses on aerospace and defense. And they acquired a majority stake in Rist, a company that deals with maritime supply, logistics, and even budget management.
Interesting. That's an interesting combination, right?
Right. You've got this defense-focused firm moving into the maritime tech world.
Exactly. So I'm curious, is that something that we're seeing more of? Is that a trend? Or is this kind of an outlier, do you think, based on some specific synergies between those two companies?
Well, and this is where it gets really interesting, right?
Okay.
Because while JFLCO isn't your typical tech investor, they clearly see value in this tech-enabled service provider that operates within their core area, right?
Right.
Plus, they're actually partnering with Risk's current sponsor, Alter Equity Partners, which suggests a continued commitment to this space, right?
Wow.
And maybe even a shared vision for where they think Risk can go in the future.
Yeah.
So what does that tell us when we see these sector-specific PE firms making these kinds of moves?
Well, I think it probably means that they have a really deep understanding of the specific needs of that industry, right?
Right.
And they're seeing where technology can actually provide a real advantage over competitors.
Right. Yeah.
It's about finding those, specific niches where technology can really make a difference.
Absolutely. And then lastly, in this platform investment category that middlemarketgrowth.org highlights, we see HIG Capital.
Okay.
And they're acquiring a majority stake in Protos SPA, which is an Italian company
Okay.
that offers technical advisory and consulting services.
So kind of a broad range of services there.
Right. And they work across a really wide range of sectors, from infrastructure and energy to real estate and financial services.
Oh, wow. Okay.
So it's not just about one particular industry. It really kind of underscores this increasing demand for, expert advice and support that's enhanced by technology
Right.
across various parts of the economy.
Yeah, it seems like everyone's looking for that edge, and technology is a big part of that these days.
Absolutely. Now, the report also talks about add-on acquisitions, which is kind of the next step in this growth journey, right?
Yeah.
Right.
So we've seen these initial platform companies being acquired, but what happens next?
Right.
Well, middlemarketgrowth.org also highlights the significant role of these add-on acquisitions.
Yeah.
So first of all, what exactly are they?
Okay, so the thing of add-on acquisitions as basically, smaller companies that are being bought and added to an existing platform company.
Got it.
The goal is to expand the platform company's offerings, their reach, or their market share.
Okay.
It's a really key strategy for growth, especially for companies that are already backed by private equity, which a lot of these platform companies are.
Right. So it's like they buy this initial company, and then they start looking around for these smaller companies that can kind of plug in and really, enhance their existing offerings.
Exactly.
Yeah, that makes sense.
And we see a lot of examples of this in the report.
Okay, give me some examples.
Sure. Yeah. So one example is Aurora Capital-backed Cold Chain Technologies.
Okay.
They acquired Global Cold Chain Solutions, or GCCS.
And this was actually their fifth add-on since they partnered with Aurora. So they've been busy.
Wow. Okay.
And GCCS focuses on a really important area, cold chain logistics for life sciences.
Right.
Specifically in Australia and India.
So it's not just about adding more of the same, it's about expanding their geographic reach.
Exactly. It's about both geographic expansion and also specializing within that really crucial industry.
Right, yeah. And then you have TJC LP's portfolio company, PSC Group.
Okay.
They're in the logistics and repair space for industries like chemical, refining, agriculture, and pulp.
Okay.
And they made a really big move by acquiring 32 Rescar operations, which deal with rail car and ISO container services all across the U.S.
Wow.
So that's a huge expansion of their operational footprint, right?
Yeah, it really shows how these add-ons can create some serious scale.
Yeah, yeah. And then we also see TSCP-backed Pesco Holdings acquiring Gorilla Pest Services.
Okay.
This one feels like a more straightforward play,
Right.
kind of consolidating within a specific service industry, which in this case is pest control.
Yeah, just bringing together similar businesses to create a larger regional player.
Right, exactly. And then we have Trispan LLP-backed Prestige PEO acquiring Concurrent HRO.
Okay.
Prestige PEO is a professional employer organization, and this acquisition basically expands their reach into the Midwest and the mountain regions.
Got it.
So again, we're seeing that geographic growth through these strategic acquisitions.
Yeah, makes sense.
Yeah. But, it's not always just about geography, right?
Right.
We also see K1-backed Gravity, a company focused on alumni and donor engagement for educational institutions.
Okay.
And they merged with Ivy.ai and Ocelot,
Wow.
both of which offer AI-powered student enrollment and engagement technologies.
Interesting.
And now it's all under the Gravity brand.
So it's kind of like a technology merger in a way.
Right, exactly. So what's the significance of that, of combining all these different technologies?
Well, I think the key there is that they're creating synergy by integrating all these different but complementary technologies.
Okay.
It's not just about adding more of the same, it's about enhancing their overall value proposition.
Right.
And that leads to more comprehensive offerings and a stronger position in the market.
Right. So they can offer their clients, a wider range of services, a more complete package, essentially.
Exactly.
Now, the middlemarketgrowth.org report also talks about exits.
Right.
Which is essentially when private equity firms decide to sell off their portfolio companies. Right?
Yeah, it's the kind of the natural end of the investment life cycle.
Right, exactly. So they buy these companies, they grow them, and then eventually they sell them.
Right.
And these exits can tell us a lot about where different investors see value and where they see opportunities to, move on.
Yeah, it's a good indicator of market sentiment and, where the smart money is going.
Right.
So, for example, we have Battery Ventures. They exited PPT, or Physical Properties Testers Group,
Okay.
which provides property test and measurement solutions.
Got it.
And they sold it to SK Capital, which is a firm that focuses on materials, ingredients, and life sciences.
Interesting. So again, a very specific sector focus there.
Exactly. It shows that there's a buyer out there with a particular interest in that specific area.
Right. Yeah.
And then Odyssey Investment Partners exited Mercalis, which is a patient services provider.
Okay.
And they merged with Pharmacord, another patient services company, which is majority owned by Permira.
All right.
So it looks like a strategic merger within that pharmaceutical services sector.
Right. So they're basically creating a larger player in that specific area of healthcare.
Exactly.
And these exits are important because they demonstrate that that whole life cycle of private equity investments, right?
Right.
And they show us where these strategic buyers or other PE firms see potential for future growth.
Yeah, absolutely. And that brings us to something really important, which is fundraising, right?
Right.
Because that's the fuel that drives all this M&A activity, especially in the lower middle market.
Yeah. So where's all this capital coming from to fund these deals?
Right. Well, the report highlights some pretty significant fundraising activity.
Okay. Like what?
So Pamlico Capital, a middle market PE firm, just closed its sixth fund.
Right.
With a whopping $1.75 billion.
Wow.
They even exceeded their initial target, which was $1.5 billion.
Okay.
So they're clearly seeing a lot of interest from investors.
Right.
And their focus is on sectors like communications, healthcare IT, and very relevant to our conversation, tech-enabled services.
Right.
So that oversubscribed fund really highlights how much interest there is in the middle market, especially in those growth-oriented sectors.
Absolutely. And then for those of you who are really interested in the lower middle market, there's some really good news.
Okay, what's that?
The report also talks about Capital the Group.
Right.
And they just closed their latest fund with over $1 billion in capital commitments.
$1 billion, wow.
And they specifically target lower middle market companies across North America.
That's huge.
Yeah, it really is. So if you're operating in that lower middle market, or if you're thinking about investing in that space, this is a really positive sign.
Right.
Because it means that there's a lot of capital out there looking for deals in that segment.
Yeah.
So the report also touches on some of the recognition within the M&A community itself.
Oh, interesting.
Yeah, they highlight the people and the firms that are really driving all this activity.
Okay.
So ACG Detroit recently announced the winners of their annual M&A All-Star Awards.
Okay.
And they recognized individuals like Ashley Gray from Akula Equity Partners, who won the Rising Star Award.
Very cool.
And then there was Chris Caron from Blue River Financial Group, who was named Dealmaker of the Year.
Nice.
So the awards ceremony is happening on May 7th at the Townsend Hotel in Birmingham, Michigan.
That's coming up soon.
Yeah. It's always interesting to see who gets recognized for their contributions to, the world of deal making.
Yeah, absolutely. And lastly, the report mentions a potentially massive transaction.
Okay.
That could have some pretty broad implications.
Okay.
So we're talking about Walgreens Boots Alliance potentially going private
Oh, wow.
in a deal with Sycamore Partners. That could be worth close to $10 billion.
$10 billion. That's a lot of money.
Yeah. It's pretty mind-blowing to think about a company that's been public for almost a century facing such a fundamental shift.
Right.
It really highlights how even these giant companies need to adapt in this ever-changing economic landscape.
Yeah. It's a big deal, especially considering that Walgreens has been a public company since 1927.
Yeah.
And the context here with all these store closures due to rising pharmaceutical costs and inflation really underscores the challenges that even well-established players are facing.
Right.
And it reminds us that the broader economic environment is always a factor in all of this.
Absolutely.
Yeah.
It influences M&A activity across all sectors, not just in tech-enabled services.
Right.
So to kind of wrap it all up for you, we've seen a really dynamic and active M&A landscape, as highlighted by middlemarketgrowth.org.
Okay.
There's a particular focus on the lower middle market within tech-enabled services.
Right.
We've observed these platform investments setting the stage for future growth, strategic add-on acquisitions fueling that growth, notable exits demonstrating investor returns.
Okay.
And there's a lot of fundraising activity going on with firms like Capital Group specifically targeting that lower middle market space.
Right, yeah. And for you, the listener, I think understanding these trends is really valuable. Whether you're running a business in the lower middle market, or you're advising on deals, or you're just interested in how the business world works.
Absolutely. It gives you a really good sense of where the investment money is flowing, what growth strategies are working, and how this important segment of the market is evolving.
Exactly, yeah.
So, given all that, the strong activity in tech-enabled services, the strategic add-ons, the availability of capital for the lower middle market, what do you think? What emerging sectors or types of companies within that lower middle market do you think might be the next big focus for investment and acquisition activity?
Yeah, it's a good question. It really makes you think about what the future might hold.
Yeah, absolutely.
And of course, we want to give a big thank you to middlemarketgrowth.org for their insightful reporting that was the basis for this deep dive.
Yeah, they do great work.
Absolutely.
Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.
Disclaimer from the Always Present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.